This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, joining us today is Angus Forrest, the chairman of Acuity, following their half-year report with, of course, the biggest achievement being the transition from an investing company to a trading company with the acquisition of Acuity Risk Management and the subsequent name change from Drums PLC. Thank you very much for joining us today again, Angus. How are you?
I'm very well, thank you, Mark. And I'm looking forward to this because we have had a very exciting 6 months. It took a long time to get there, but we have got there, and we're now focused totally on driving Acuity Risk Management forward.
Okay. Well, of course, when I think Acuity was valued at approximately £5 million upon the acquisition there, and since then the company has been focused on sales of the software as a service, the risk management solution, also known as Streams, and it has secured 2 major UK contracts with a combined value of over £450,000. So, I mean, obviously that's one of the bigger achievements of the year so far, Angus. But from your point of view, what are the main achievements that the company has seen through?
Well, the whole RTO process is very onerous, and it diverts attention away from actually building the business. But what we have done in the period is Simon Marvel, who founded Acuity, has stepped back, and he is now part-time as a consultant. And Kerry Chambers, who joined us 2 years ago, has stepped up to be the chief executive, and she's already making changes which can be seen in our results. The sales effort and marketing effort is much stronger. The great thing about Acuity is the opportunity. It's a very large market. It's valued at about 15 billion last year. That's $1 billion last year. It's expected to grow to $27 billion by 2027. And if we just get a small chunk of it, our shareholders will do astonishingly well.
Yes, indeed. Well, of course, I noticed from the report as well that the group did incur a loss of $272,000. This, you say, is primarily due to the administrative costs associated with the acquisition, as you mentioned there. They are quite costly and time-consuming. What is the plan, therefore, to become profitable, Angus?
The main driver is to increase the revenues and to win more orders. You would be able to see in our statement put out on the 28th of September that the whole activities of Acuity Risk Management have increased. So I could tell you till I'm blue in the face that sales are getting better, marketing is getting better. But if you look at the figures, you'll see that although annual revenues went up a relatively small amount, the renewal rates 96%, the gross margin 90%, and the sales pipeline has increased threefold over last year. And part of that's due to partnerships. So we're getting more opportunities in overseas territories. Every one of our competitors, all the big ones, have grown through partnerships. And so are we, both in the UK and overseas. And the biggest sector of this market is in North America, where we have some very interesting and possibly influential customers in financial services and ordinary industry. We have a building pipeline in North America, and most of that has been generated by partners. It takes quite a long time to get from a sales opportunity to an order. We would expect 6 months would be quite common. and particularly if we're entering a new market.
So, would you be? Of course, you are a British company, and I know that you are focused on growing the British sales side of it as well. But you do want to. We hear this with technology companies wanting to crack the US market. Of course, it is a huge market, and I think you're right in saying that partnerships really is the way forward there. How are you going to split your focus between building the UK side and the United States side, and where are you in the strategy of doing this?
We have a strategy. We appointed a partner manager last year, and she has built the opportunities in North America from nothing to roughly 1.2 to 1.5 million in that period, mostly through partnerships. She's also activated our partner program, which existed in the UK. So we know that we can take what we've done in the UK and we should be able to translate it to the States. And in the States, we've got both partners like we have in the UK, and we've also got some slightly different partners who are more introducers of opportunities. But they've got very big sales forces. They've got 150 salespeople, and we've got 1 or 2 or 5, and we will be spending money on sales activity in the States to grow that. But we certainly won't be taking it from the UK, where there's still plenty of growth opportunity.
Okay. Well, I'll come on to some KPIs in a moment and maybe look at how we can apply them to the United States. But I noticed as well that the company's net assets increased to 5.463 million compared to 1.374 in the previous year. And I guess most of this, or a big part of this, will come from the acquisition there of Stream. Is the plan to grow your net assets, or is it more to focus on the sales and the turnover from a business point of view?
We would anticipate net assets growing, but the real driver is on the revenues and orders. Sure. Because SaaS businesses, and we are a SaaS business, are typically valued as a multiple of revenues. So if we get the revenues up, then the capital value is going to go up. And at the moment, we're standing at a fairly big discount to the sort of value we could be sold for if we went for sale. So we've got revenues of about 2 million end of last year. You can multiply that by 5 or 6 to get to a reasonable value for an exit.
Okay.
And we are valued about 5, I think, at the moment.
Okay. Well, I noticed as well from the report that, of course, you mentioned the KPIs were trending positively, indicating growth and improvement in various aspects of the business, including annual revenues, gross margin, renewal rate, sales pipeline, and net recurring revenue, as you've alluded to in this interview. But I wonder if I can ask you a bit more on the KPIs. Are you able to elaborate and give any specifics of how you are measuring the success to grow this business?
Well, we measure all the KPIs every month, because unless you measure, you have got no idea how you're doing. And businesses are built really on having a product selling into a market run by good people, measurement and focus. And if you can get all of those things right, I've explained that the market's large and growing. I've explained that our sales pipeline is growing. And what we've got to do is strengthen particularly our sales effort, and get the new orders flowing in. I'm very excited by the order we won worth between 400,000 and 500,000 in the last quarter. Is our largest ever. And I think that we have got another one, which is looking fairly promising for this quarter. And then there are a whole series of other ones. But it's a real step up from where the business was 3 years ago.
Okay. And I mean, would you be able to publish the KPIs so the market can see what it is you want to do and how it's going? And obviously they are internal KPIs, but just thinking give the market something more tangible to grab hold of.
If you look in our interim results, which we published on 28th, on the third or fourth page, in my statement, the KPIs are laid out. So the annual revenues, gross margin, renewal rate, sales pipeline, net recurring revenue. And so I hope that openness will enable investors to properly understand the business going forward, and that we're not frightened of showing what we're doing.
Okay, yes, good. If they're there in the report, I will take a note of them, and we can track them for future interviews that we have when you publish more further reports. Would it be fair to say that you'd be very happy if you could crack the first United States sale, within the next 6 months, 12 months?
I think we should be winning orders in the States in the next 6 months.
Okay.
There'll be one or two smaller ones, and then I think we've got a number of prospects which should, and the difficulty is knowing what the conversion rate will be in the States. We know what it'll be in the UK, but in a new market we don't quite know, and there are reasons why people might be frightened of buying from a relatively small UK company, but there again is where our partners come in. So one of our partners, CGI, is an enormous company. It's Canadian. It's got billions of dollars of revenues, and it's helped us an awful lot in the UK. And if we do well here, we should partner up with them in the States.
Okay. And just a final thought from you, Angus. Of course, the company's gone through some major changes, and it's really just getting going, really just starting down that long road. You say in the report that the company is focused on achieving long-term sustainable growth in shareholder value, primarily through organic growth in existing and new global markets. So how are you feeling about the journey so far that's just got started? And where's the focus going to be? You talk about wanting to strengthen your sales efforts and organic growth there. So that's really about word of mouth, isn't it? Not pushing too hard. But what's the strategy going forward?
Well, I agree with you about not really pushing too hard, because we want to build something which is sustainable. And that means that the customer is very happy. And you can see that by looking at Gartner's user surveys for GRC. You'll see we've got 4.8 stars, and we're in the top 3 or 4. So that's our users saying to Gartner that, and Gartner's very influential, particularly in the States. If you're making sales, it both generates leads and opportunities, but it also helps conversion. So if users are saying we're doing well, that's fantastic for us. The other things that we will be doing is providing support, and Kerry's going to the States next week to do some talks. That is basically supporting and providing collateral to give comfort to would-be buyers that we are interesting people to do business with. And that will be supported by further activities, particularly with our partners.
Okay. Well, I guess in terms of news flow, then, Angus, we can await to see some news of new contract wins in the near future. That would be ideal, I suppose.
I very much hope so. I'm reasonably confident that we will see some in the near future.
Okay. Well, thank you very much for your time today, Angus Forrest, the Chairman of Acuity Risk Management.
Thank you very much.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.